I was saying hello to Rob. Here he is. The big story, stocks are way down. This is a pretty big drop, biggest since June. What's going on?
Yeah, ultimately what we had today was what I referred to as the clapper on Wall Street. Risk on. So today we got risky. Tomorrow the market may be risk off and the market may rally a little bit. We're in a trading range where as we get higher, it's tough to find a catalyst to send the market above the 10,700 level on the Dow. And once you get to about the 9,600, it's tough to find a catalyst to send it much lower. So today we got some news that economically wasn't great. The world seems to be slowing down as far as trade goes, as far as business goes. So it was a risk on kind of day. And
I like the clapper analogy.
It works.
It does actually work.
So,
but you don't sweat too much about these momentary drops and jumps, do you?
You know, I heard one analyst say that there's a 50% chance we go into a double-dip recession. I'm not crazy about where we are. It's in Goldilocks. It's on the colder side. It's not too hot. It's definitely not too hot, but it's not too cold.
And it's not just right.
But it's definitely on the cooler side versus the just right side. So I'm not stressed. For instance, I found some great investments overseas, some good value investments in the United States. You know, Apple, as it dips, it becomes a little bit more attractive. So I'm opportunistic in a weak market.
All right. And news about Cisco today. What's happening with them?
Cisco's like Crisco. They typically are cooking. They're typically a great company. Video consumption, whether you're watching Cron at the website, cron4.com, you can watch the video. We need network equipment and gear here. We needed the phone company. We needed it at our house. They're kind of an end-to-end solution provider. Video is the big story of the internet for the next 10 years, and Cisco is well positioned. So any weakness, I think, is a trading opportunity. I'm not a big fan of buying tech stocks because ultimately they don't create a lot of shareholder value. They tend to trade in a range. So Cisco at 25, maybe to 30 is the kind of trade that I would think about. Intel at 20 to 25 is the kind of trade I would think about. Tech stocks are renters. They're not stocks you want to own.
Okay, so it says top forecast, but the sales missed. What do you mean the sales missed?
They topped earnings forecasts,
yeah,
but they were light on their sales side. So ultimately, if you fire a couple people, you can make the earnings hit. But ultimately, it wasn't the revenues and the margins that hit the bottom line. So because the revenues missed on the top line.
Disney profits way up. Tell us about that.
I love Disney. They've got people people like Cinderella that hasn't worked in 60+ years. They've got a franchise of product that I think is great for my children and my children's children. They're going to be in business a long time. You don't want to own Disney for 1 year. You want to own it for 10, 20, 30 years. And their ESPN division is hitting the ball out of the park right now for the cable companies.
Disney profits up 40%. That's
a lot of it tied towards cable and ESPN and the World Cup.
Okay, still. That's pretty great.
So it worked out for him.
So Rob is going to come back. He will be answering your emails. Stay with us.